You're watching Mirror 7 News. Stay informed, stay ahead for more news.
Toronto Dominion Bank, better known as TD Bank, has found itself in the spotlight after a notable downgrade by Wall Street Zen. The bank, which trades on both the New York Stock Exchange under the symbol TD and the Toronto Stock Exchange, was shifted from a hold rating to a sell. This marks a significant change in sentiment toward one of Canada's largest financial institutions. The move raised eyebrows because it came shortly after TD reported stronger than expected earnings. In its most recent quarter, the bank posted earnings per share of $1.91, which was well above analyst estimates of $1.46. That performance demonstrated the bank's ability to deliver profits even in challenging conditions. However, the optimism was quickly tempered when revenue figures were revealed. TD generated $10.12 billion in revenue, falling short of the $13.73 billion analysts had forecast. This shortfall put pressure on sentiment, as investors saw strength in earnings but weakness in top-line growth. Currently, analysts remain divided on the stocks. Some research firms have cut their ratings, while others have upgraded it, creating a mixed picture. According to MarketBeat's data, 3 analysts rate TD as a buy, 4 as a hold, and 1 as a sell. Overall, the consensus is still a hold, with a target price of around $93 per share. That figure suggests potential upside from current levels, but it also highlights uncertainty around whether TD can sustain growth in the near term. At the time of the downgrade, TD's stock opened at $79.20, hovering just below its 52-week high of $79.49, and well above its low of $51.25. The bank currently carries a market capitalization of about $134.7 billion, with a price-to-earnings ratio of 9.25 and a relatively low debt-to-equity ratio of 0.09. These numbers suggest financial stability, but investors are still grappling with questions about long-term momentum. Institutional investors have been adjusting their positions as well. Hedge funds and advisory firms have either added to or trimmed their stakes. Notably, Silver Lake Wealth Management lifted its holdings by nearly 45% in the second quarter, while Osaic Holdings boosted its position by 20.9%. This shows that professional investors are not in full agreement. Some see value at current prices, while others remain cautious. In the bigger picture, TD continues to be a major player in North American banking, with operations spanning Canada, the United States, and international markets. Its business segments range from retail banking to wealth management and wholesale banking, giving it a diversified foundation. Still, the downgrade serves as a reminder that even large, stable banks are not immune to shifting market expectations. For investors, the message is clear. TD Bank remains strong on paper, but concerns over revenue growth and analyst sentiment may weigh on its stock performance in the near term. Stay subscribed for more videos.